Hello, my name is Eddie Tofpig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Eurodollar. A bearish closing Black Marobozo on Friday, as well as a second bearish Black Crow and a suitable follow-on low to the previous session's immediate countering bearish engulfing pattern. The cap on the market was the 50% Fibonacci line for 2023 at 108.64. And the market finally exited below the 108.79 to 108.36 zone that contained all the moving averages. Further up, we have the important 50% Fibonacci line for January 2021 to September 2022 move at 109.44. This had been a good capping resistance in recent weeks. And even further up, we have the broken green highlighted lower bull channel line currently at 110.09 of the October 2023 to late January 2024 bull channel. This had also acted in the past as an overhead capping action. Even now, I'm still wondering if the market will continue to trawling along the underside of this lower bull channel line. Meanwhile below, well, we have congestion below, but nothing to write home about until the May 2020 low 107.66. And the more important April 2020 low at 107.25. So far today, well, not much. A small reactionary move back up, though not as far as the band of moving averages overhead as yet. Cable. A second bearish Black Crow on Friday and a suitable follow-on lower to the previous session's key reversal down. More importantly, this was the second consecutive close below the lower time, currently 127.07, highlighted in dark blue on my daily chart of the broken November to December 2023 shallowy bullish shift pitchfork, and its reinforcement, the short medium moving average, currently at 126.83. It was also a first close below the medium moving average, currently at 126.43, and a dip down below, though it was ultimately a rejection on Friday of the combination of the flatlining long moving average, currently 125.88, and a 50% Fibonacci line of the July to October 2023 move at 125.90. Finally, it was also a dip below the previously mentioned general congestion zone formed between December 2023 to January 2024 from the 126 area up to the 127.75 area. Further below, we have the lows of February at 125.32 and 125.15, the latter apparently being the more significant. So far today, a reactionary move back up based on the combined 50% Fibonacci line at 125.90 and the long moving average approaching the rising medium moving average. Euro sterling. An interesting indecisive doji cross on Friday after the previous session's key reversal up. What it revealed was the capping power overhead of the previously highlighted heavy duty congestion formed from the crossover of the upper trend line, currently at 86.17 of the purple highlighted late January breached but not broken expanding wedge pattern, and a dark blue upper time, currently 85.98 of the November to December 2023 bearish shift pitchfork, plus the recent dead cross of the medium moving average, currently at 85.97, down through the long moving average, currently at 86.07. Below, we have the combined December 22 and 2023 lows at 85.45 and 85.47 respectively, as well as the flatlining short-medium moving average, currently 85.51. Overall, the market still remains within the breached but not broken purple highlighted late January small expanding wedge pattern, currently 85.28 to 86.17. The recent process of moving higher, the market left behind a similar pipe bottom in March to the one seen in mid-February, leading to speculation on my part that we might have a larger double bottom pattern formed with these pipe bottoms. Now, more on this should it develop. So far today, a reactionary move back down, looking like a possible bearish engulfing pattern, if only just. US dollar against the Japanese yen. An indecisive spinning top on Friday, but with a new high not seen since November last year. At the same time, it could also be seen as a bearish dark cloud cover pattern. The base of the action was on the congestion from late February between approximately 150 even and 150 3/4, and the peak was capped by the high back in November last year at 151.92. Topside, beyond the November last year's highs, last year high, I should say, we have the middle time currently 152.87 of the July to December 2023 bullish Andrews Pitchfork, which is highlighted in bright red on my daily chart. We're also overall still within the larger purple highlighted February 2022 to January 2023 bullish shift pitchfork, in between the middle time overhead currently at 158.52 and the lower time below currently at 144.44. So far today, a seeming early follow-on lower to Friday's bearish dark cloud cover pattern rather than its indecisive cross nature, though the move lower stopped short of Friday's low. US dollar against the CNH, the offshore Chinese yuan. A very strong bullish long white Marabouts on Friday, following on from the previous session's key reversal up an earlier 3-day bullish advance block pattern, and setting up the conditions for March to be a possible monthly key reversal. Thus, if we close on the 29th of March, please be aware Good Friday is not a holiday in China and the US does not celebrate religious holidays. So if we close on the 29th of March, either over 720.65, under 718.49, then we'd be on. Right now we are looking at a possible monthly key reversal up. The move up on Friday slowed and halted just ahead of the neckline currently at 728.89 of the bright red June to July 2023 head and shoulders continuation pattern. The base of the action was on the broken but still interesting lower trend line currently at 722.35 of the blue highlighted mid-January to date ascending triangle pattern that's currently at 722.35 to 723.63. Now 2 weeks ago I laid out some ideas for potentials below for breaking out of such an ascending triangle pattern. Thus a primary target X is down in the 716.05 zone with a secondary hard to reach target X1 down in the 710.70 zone. The opportunities below are severely curtailed right now, but for the moment I will keep those targets on my daily chart as we have already seemingly had one possible false break lower. We might now have a false break higher as well. So as I say, I will keep them on for now, but I'm happy to retire them in a heartbeat. So far today, an almost as strong reactionary move back down today as the move up on Friday was. Now prices have set up today for a possible bearish dark cloud cover pattern and possible pipe top. It was interesting to note how the market dipped below the flattish upper trend line of the ascending triangle, but halted at the very slowly rising long moving average just below at 722.92, and that's before moving back up again. US dollar against the Mexican peso. A slightly higher but still indecisive spinning top pattern on Friday after the previous session's immediate countering bullish piercing line pattern. The move up was capped by all things the declining short moving average currently at 1681.58, and prices did pierce but did not close over the neckline currently at 1677.01 of the February to April 2021 head and shoulders top. Looking below, we have support from the 2023 low at 1662.11, but overall we are still in between the dark blue highlighted tines of the December 2023 to January 2024 mildly bearish shift pitchfork. We have the middle time overhead currently at 1686.73 and the lower time below currently at 1653.42. Now there is also some congestion where we are now between 1670 to 1680 even from August last year. So far today, capped by the neckline and looking like an indecisive spinning top right now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.